Let's talk about it. Predatory payday loans and how they're keeping you broke in 2025. Let's get into the clips.
Let's talk about payday loans and why they should be illegal. If you don't know what payday loans are, and if you don't, that's okay because we're not taught about what payday loans are. So payday loans are, and you can find them all over, but it's a place where you go to get a loan, and they're very, very easy to get, but they trap you in a cycle of debt because the interest rate is so freaking high. There are payday loans that will have an interest rate of 100%, 200%, 400%. So when you're borrowing $100, now you owe $300 back. And if you couldn't afford the $100, which is why you went there, now you can never, you can't pay back the $300 and you're caught in a cycle. The worst part about payday loans is they are set up in lower income parts of town or poverty stricken parts of town. And so they are specifically designed to target those who are struggling financially to put them in a cycle of debt. It is so messed up. So make sure to stay away from payday loans and help educate others on it as well.
Some people have no choice but to use payday loans if they're in a bind. Everybody doesn't have family and friends. The big issue I have is the amount of interest that they are allowed to charge. No way you should be charging 400, 500% interest on these type of loans. They should be capped at a certain amount, whether it's 30, 40, 50%. I understand it's a business and you have to make your money, and you're dealing with high risk clients, people who don't have a great track record of paying it back. But to literally exploit people and charge them insane amount of interest is just in my opinion, diabolical.
Well, hello. It's Vegas Police, and this story is from the Nevada Independent. The Nevada Supreme Court has rejected a proposed ballot initiative that would restrict interest rates to 36% at the payday loan companies like this one right here. They currently average 548% in this state. But take note, that is only the 5th highest rate in the United States. There are 4 states with higher interest rates. Texas is number 1. Utah and Idaho are also higher. The reason that the Supreme Court rejected it was because it had multiple issues on one ballot initiative, and you're only allowed to have one issue. They were also addressing the amount of money that you could keep in your bank account, as well as limiting the garnishment that they could take every week from your pay. The payday loan company is fiercely fighting industry regulations. Companies like Dollar Loan and Money Tree are working against this, but a slimmed down version is going through the legal process and could go before the legislation next year. Vegas Policy.
I'm sure these payday loan businesses or corporations advocate very, very, very heavily and spend a lot of money for lobbyists to prevent any type of cap on the interest rates when it comes to payday loans. They don't want any type of regulation. They want to be able to charge this 400, 500%, essentially, ripping people off. And again, if you can't afford $100, $200, $300, I mean, how are you going to be able to pay back 4 or 5 times that amount? Again, I don't have an issue with payday loans. They just need to have some type of cap on the interest rate. I understand the interest rate is going to be elevated because of the risk of the person, but to exploit a person, I just don't think that's fair. And again, a lot of times, well, I'm not going to say a lot of times, but in some circumstances, people who continuously abuse payday loans is usually associated with some type of vice, in my opinion. Gambling, drinking, drugs, something along those lines that's always causing them to be short on money again and again.
You know what? I used to totally agree with you. I actually used to work for a company like this. It was like my first real job, and I worked there for a very long time. It was actually not a bad place to work, really. But it used to make me cringe. I was very sheltered. I grew up with not a lot of opportunity, but some opportunity, different from what some of the people who went to places like this had. So I used to agree with that 100%, but looking back as I've advanced in my careers, went into different fields and just seen how many people live in poverty, I don't necessarily think that this is bad. I mean, yeah, it's very high interest, but these companies have to charge that to make money. But they're serving a spot in the community that banks won't serve people. If you need money, if you really need some money, you have no options to turn to. If you don't have credit, if you don't already have money, you don't have any choice but to go to these places. And yeah, it should probably be tighter regulated. Probably not as much interest, but they're serving a spot in the community that no one else is otherwise serving, and people are just trying to survive. And I think we need to be careful not to over-regulate ourselves to end up hurting ourselves, because if you put them out of business, you're actually going to put those people who are already living in poverty into worse poverty, because they're not going to have options to get a little couple $100 that might can make a difference to someone who's living in poverty. Whereas you're judging from an outside perspective of you're getting taken advantage of. Well, they're not. They're just trying to survive. If I'm wrong, tell me. I don't know. That's just my point of view.
I believe he's absolutely wrong. And whatever payday loan company he worked for, um, their marketing training department did a hell of a job on him with the brainwashing. I mean, because he boarded hook, line, and sinker. Again, he keeps using the word servicing, I noticed throughout the clip. I wouldn't use the word servicing, I would use the word exploiting. They are exploiting people who they know are in destitute and down bad financially for their own gain. And they exploit this with insane amount of interest. I wouldn't have a problem with payday loans. Again, even if they charged 40, 50% interest, 70%, I could understand due to the high risk of the client. But when you're charging 4 to 500%, already knowing that the person, whatever the 100 or two or $300 buck, two or $300 they came to get, that was already going to be a struggle for them to pay back. And I think they're going to be able to pay that back times three, four, five. That's not servicing. That's exploiting. And honestly, the only person who really benefits in the end is the company. They will be better off with these payday loans, honestly, not even existing, and finding and being forced to find another way to come up with 100 or 200 bucks, in my opinion.
Wondered why payday loans are usually around low-income neighborhoods. This is because most banks will not lend to those that earn a low income because they're considered high risk. So these people that earn a low income have to turn to payday loans, which charge a ridiculous interest rate of around 45%. This high interest rate makes it actually hard for them to pay back the loan.
That's actually pretty conservative compared to the rates that we've seen. Like I said, 45%, I actually think that's fair given the demographic. You're dealing with people that are high risk and they already have a track record of not paying back. So 45%, in my opinion, is not bad. I have a problem with the 450%.
Loan, so they have to borrow more money to pay off the interest to pay back the loan, which puts them in this never-ending debt cycle. This type of lending practice is predatory, as it usually targets those that earn a low income or newcomers that usually would not qualify for a low interest loan. In the budget 2023, the federal government proposes to reduce the criminal interest rate from 47% to 35%. I personally think that 35% is still criminal. 35% is crazy. Let me know what you think about this proposal. Should it be lower than 35%? Also, I was invited by the Department of Finance to the budget 2023 reading. So if there's anything you want me to cover inside of this budget, let me know in the comments and follow me for more.
I agree. It definitely should be some type of cap. Again, it should still be beneficial for the business because they are taking on risks. So, there should be definitely a higher level of interest charge. But again, when we start talking about 3-digit interest numbers, no, that's absolutely not doing any service to anyone but the company in the end.
So I haven't done a rant in a while, but let's talk about the companies that keep reaching out to me about paid collaborations. So you will never see on here a paid collaboration between something that I do not support. So the companies that keep coming after me for doing paid collaborations are ones that are promoting basically payday loans or payday advances. And while I think some of these companies are great, other than their payday advance, I still would never work with them because they offer that service. And I don't think it's beneficial to people to offer those types of services. I feel like it's very, it's preying on people who don't have enough money, and it's giving them a temporary band-aid and not an actual solution. So I just wanted to say I will never support any of those companies, and you won't see any paid collaborations on here that are things that I don't support and that my brand stands for.
Shout out to her for having integrity, not being about just getting a bag and promoting anything to her subscribers, her followers, just so she can benefit, even if it's at their own detriment.
Congratulations. Underneath it were really bad though, and I had them for so long.
Oh, you have a little swastika? For f***'s sake, what?
Actually,
what? There's always why?
It's bad. Well,
oh, good.
I took out a loan because I was. Let me just explain. So I had a tattoo appointment.
So you borrowed for a tattoo?
Yes.
How much?
$1,200.
And to who?
It's like one of those. Oh, it's like a payday loan.
Oh, a $1,200 damn dollar loan for a payday loan for a tattoo payday loan.
But it's really nice.
What's the? Shut the f up. What's your minimum monthly payment? What is it that?
Yes. Well, it's a cover up.
Great. It's a tattoo. Okay, I've seen a million.
Yes.
Congratulations.
Underneath it were really bad though, and I had them for so long.
Oh, you have a little swastika?
No, it wasn't a swastika. It was just like stuff I got when I was really, really young, and I got one for a friend of mine, and you know.
Then we didn't need to borrow $1,200 to get it now. What's the minimum monthly payment on this $1,200?
I haven't been paying it.
Huh?
I have not been paying it.
You have.
Yeah, a situation like this, I don't feel bad at all. You took out a payday loan for a tattoo. I mean, completely unnecessary. Who knows what the interest rate, as we seen in the clips, it could be anywhere from 50% to 500%. So that tattoo may cost her anywhere from $1,800 to $5,000 to pay back.
I'm gonna tell y'all a story about the worst job I ever had. Worst job I ever had was being a loan officer at a payday loan place. Now, this was back in the Gap. I'm a bit up in the age. You used to have to go to people's houses and knock on their door to collect on the payday loans. So I'm sitting over here trying to collect on payday loans, and people are in their underwear drunk, mad. They might have a gun, you know, like it was just terrible. But, you know, the worst thing was just the collecting itself. It's just not in me to just go and demand people pay back a high interest loan that was just completely unethical in the first place. People who are just struggling, you know, I just couldn't do it. It didn't vibe with me. So I made the decision to just get out. I just got out of that job, got into a position where I was actually serving people who wanted to be served. So I started waiting tables. Much better deal for me.
Yeah, that's probably one of the worst jobs to have. Just imagine trying to go around and trying to collect people who took out payday loans. Again, like he said, a lot of these people were drunk. Again, it's, you know, I believe it's a direct correlation with these payday loans and people who have vices such as drinking, gambling, you know, drug use. Definitely think there's a direct link between those two. You're literally endangering your life because you're dealing with people who probably are not in the right frame of mind or in a desperate situation. So I would advise, if you're not good with them hands, definitely would not want a job like that.
What are people affording life right now?
For me, it's been family and friends.
This my last time trying to make this video. I don't care if I stumble up on some words or whatever. Y'all gonna get the point. So you have to go back and watch that guy's video. So he basically talks about how he got wrapped up into a payday loan and how the cycle is so vicious. And that is so very well true. I used to work for one of the largest payday lending companies out there. And I would see the people come into, and I don't care, I'll tell y'all the name, Advance America, non-stop, all the time. I mean, it was the same people every 2 weeks, once a month. like all the time. And I knew these people so much that I knew their cycle when it comes to paying their bills, when it comes to paying their payday loan. Like, some people was just so like clockwork. Like, if they missed one day, I would know that they would eventually come in and pay. It was crazy. But anyway, there was this one particular couple that I remember, and it was a husband and a wife. They were both getting $600 each. It was so crazy to me. And it was a vicious freaking cycle that they were in and that they could not get out of. And she made the comment like, God, I wish one day I could get out of this vicious cycle. And so I said, well, you can. And she was looking at me like, how can I get out of it? She was like, because I don't have all of this money to pay. I can't afford to not pay and not be able to pay my bills. So back then, all you needed to get a payday loan was an open checking account. It did not have to have a positive balance. They didn't care if it was in a negative, as long as you had a checkbook with blank checks and you were able to write a loan. That's it. That's all that you needed. But anyway, back to what I told her. I was like, well, simply, you guys just don't pay the loan back. And she was like, oh my God, I can't afford this. I can't afford that. And, you know, she was so not willing to ruin her relationship with Advance America. And I was like, well, if you want to get out of it and you don't have $1,200+ just sitting over here that you could just freely give away and not think about it anymore, just simply stop paying the payday loan. What's going to happen is we're going to send those checks to you guys' checking account. They're going to get returned back to us, and we're going to sit there on those checks and constantly call you and get on your nerves until you come and pay. And if you don't ever come and pay, guess what? You just don't pay. And what they would do is they will hold on to those checks and then resubmit those same checks in the bank in hopes that the money was there. Because we would have to call the number to see if the checking account had funds in it, and it would tell us if it would cover the check or not. And if we did, if it would cover the check, we would rush over to the bank, deposit the check, get our money, and that's how we recover the funds back. And that rarely worked. So if you are in there and you are wrapped up in a payday loan, make sure you read your contract and see what it says in it now. And if things are still the same way as it was before, simply don't pay that loan back. Go open up a separate checking account, switch your direct deposit, and then at that point, work out some type of an agreement or an arrangement with that payday lending company so that you can pay it off if you choose to do so. But yeah, that's the only way you are going to get out of that vicious payday lending cycle, is to simply not pay them, or just have enough money where you can afford to pay them off and just not worry about it. But yeah, that's my little 2 cents. If you're wrapped up in a payday loan, just simply don't pay them out. All right, love you, bye.
To summarize what she said simply, she just taught you how to run off on the plug.
Here's why you should never step foot in a payday loan store. Back in 2013, I was working at a restaurant, and I served a woman who gave me her card and told me that if I was ever in need of a job, to give her a call. I ended up leaving the restaurant a few weeks after I got her card, called her, had an interview, and within a few weeks, I was employed at Cash Money Check Cashing Inc. as a customer service representative. So part of my roles and responsibilities were cashing checks. I did foreign exchange transactions. I issued payday loans, and I did a lot of Western Union transactions. Essentially, a payday loan is, say you're a few days away from your payday, you're a few $100s short to make a bill payment. You come in and see us. You show us how much your take-home pay is, what the frequency of that pay is, and Ontario legislation allows us, at least it did at the time, it could be different now, they allowed us to offer you 80% of your net pay, up to a maximum of $1,500. On your next payday, you would come back and pay us the principal plus $21 per 100. So if you borrowed the maximum $1,500, you would be paying back $1,815. Now, for most people who are in the situation of having to take the loan in the first place, that meant that they would have to reborrow. And that, my friends, is how the vicious cycle of payday loans begins. But that's not the only way it begins. The reason why these stores do Western Union is because they hope that after a certain amount of money that you send back home, you're going to need a loan too. And as we know, most people who utilize Western Union are members of the immigrant community, and that is why you mostly find these stores in areas where there is a lot of government housing, a very low household income, and a very high immigrant population. The few years that I worked there, I saw lives turned upside down. It broke my heart every single day to see young moms, people with disabilities coming in, borrowing off of their Canada Child Tax, off of their ODSP, even off of their welfare checks. But Ontario legislation allows all of this. There are such predatory tactics in place to urge the people who are not payday loan customers to become payday loan customers. If somebody that just sent Western Union came in, we would have to ask them, how about we send this money for you today and you can come back in 2 weeks and pay it then. The payday loan cycle is so difficult to get out of. And if you are ever in the unfortunate situation of finding yourself in it, here's what you do. Let your loan bounce. You let the payment bounce. Take the $40 NSF fee, contact the collections department for the payday loan store that you borrowed the money from, and make a payment plan that works for you. Otherwise, getting out can be very, very difficult.
She did a great job explaining the inside workings and how they had, imagine upselling a person into a payday loan. That is some nasty work. Let me know what you think in the comments below. Do you have a payday loan stories? If so, let me know in the comments below. I look forward to hearing from you. Don't forget to like, subscribe, and share.